Hello dear watchers! In the last episode we talked about the power of compounding. I know this time you would like to take a wilder ride. That's why we are going to learn about earnings report. Let's have a look at Nike. Oh, no, the footwear, I mean the Nike stock. Okay, here it is. And it reminds me a roller coaster. Looking closer, we can observe that some of the daily opening gaps can be associated to the earning reports. Want to understand why they drive volatility? Give this video a thumbs up, subscribe to the channel, and let's roll. Earnings report is a quarterly event when public companies announce their performance. By analyzing them, investors can begin to judge about the financial health of the company and determine whether it deserves or not their investment. The first loud figure is the actual earnings per share and revenue versus the forecasted values. That's called the earnings surprise, and it tells us if the company beat or missed their estimates. Naturally, when a company beats its own expectations, that's a good sign for the investors. The second thing to look at is if the past records form a rising trend and how the company is forecasted to grow in the future. Diving deeper, you will see that the world out there is much more colorful. There is the income statement, the balance sheet, and the cash flow statement. Let's examine the income statement of the Wonder Company, located in the state of Neverland. First of all, we have the revenues. That is simply the money the company received in the given time period. That can be operating revenue, which is coming from company's primary activities, such as product sales, or it can be non-operating, which is realized through secondary, non-core business activities such as sales of used equipment. That is followed by the expenses. As the name says, that is the money the company paid. Again, that can be related to the primary activities, such as the cost of the goods sold, or non-related to the primary activities, such as the utility bills. Putting those two together, we get the net income section, containing the gross profit, which is the difference between the total revenue and total expenses. Then, we subtract the applicable taxes and get the net income. The last important figure is the earnings per share, or EPS. To get that magic number, we have to divide the net income to the number of shares outstanding, let's say 10,000 in our case. If you would like to take a photo of a company, the balance sheet is what you need. It represents a snapshot of the company's assets, liabilities, and shareholders' equity at a specific moment in time. It is a good instrument to judge on a company's capital structure and is used to compute different financial ratios. That is followed by cash flow statement, which is the third type of financial report. It helps investors to understand how operations are running, where the money is coming from, and how the money is being spent. It includes three components: operating, investing, and financing activities. The operating activities include any sources and uses of cash from running the business and selling its products or services. Investing activities include any sources and uses of cash from a company's investments into the long-term future of the company, such as purchases of property and equipment. Cash from financing activities include the sources of cash from investors or banks, but also the payments to them, for example, equity insurance, stock repurchases, dividends paid, and repayments of debt. The cash flow statement basically restructures the income statement with the balance sheet into its three major business activities. Although financial statements provide a wealth of information on a company, they are open to interpretation, and as a result, investors may draw different conclusions about the company's financial performance. If you want to see a real example of the financial reports, follow the link in the description which leads you to the report of Nike. But not before you give this video a thumbs up and subscribe to the channel. Hope you enjoyed and see us in the next episode. Good luck in your investment journey.